Attention Oregon vets, you don't want to miss this. Hi there, I'm Matt Jolivet, owner of Associated Mortgage Brokers and an independent mortgage broker with nearly 25 years of experience helping military families find the right home financing. Since I was in the Marine Corps, I understand the veteran mindset and the unique challenges military families face when buying homes. Today, I want to talk about an Oregon-specific benefit many veterans don't know about. It's called the ODVA loan, and since 1945, it has helped over 334,000 veterans achieve home ownership in Oregon. What consistently surprises me is how many veterans have never heard of the Oregon Department of Veteran Affairs Home Loan Program. It's been around for nearly 30 years, yet remains unknown to many who could potentially benefit from it. In today's video, I'll walk you through what exactly the ODVA loan is and how it differs from your federal VA loan, the qualification requirements, and who's eligible, the key advantages and potential drawbacks compared to a federal VA loan, when it might make sense to choose one over the other, the application process from start to finish, and some common questions. This isn't about pushing one option as always better than the other. Both loan programs have their place, and the right choice depends on your specific situation. My goal is to make sure you know about all the options available to you in Oregon so you can make the most informed decision possible. Before we dive in, take a second to hit that subscribe button and notification bell if you want more content about veteran benefits and mortgage options. Now, let's explore this unique Oregon benefit that not enough veterans know about. Let's start with the basics of what makes the ODVA loan different from the federal VA loan you might be more familiar with. Think of the federal VA loan as standard issue gear, while the ODVA loan is that specialized equipment you didn't know was available in supply. The Oregon Department of Veteran Affairs Home Loan Program is a state-level benefit that operates completely independently from the federal VA loan program. While both serve veterans, they have different funding sources, different rules, and different cost structures. The state-run program was established in 1945 after World War II to help returning Oregon veterans achieve home ownership. Since then, it's provided over $8 billion in loans to more than 334,000 veterans. That's nearly 80 years of serving Oregon's military community with remarkably little national attention. The ODVA provides fixed rate 30, 20, and 15-year mortgages specifically for owner-occupied homes located within Oregon's borders. For 2025, the maximum loan amount is $806,250 across all Oregon counties, which aligns with the current Fannie Mae conforming loan limit. Now, there are a few important parameters to understand upfront. ODVA loans are for purchase only, not refinancing existing mortgages. You can use this benefit up to 4 times throughout your lifetime, but you can only have one active ODVA loan at any given time. What makes this program unique is that it's funded through state bond sales rather than being backed by the federal government like VA loans. This funding mechanism creates both advantages and limitations that we'll discuss throughout this video. Now let's break down who actually qualifies for this program and what properties are eligible. I promise this eligibility process is easier than qualifying for special duty assignments. For service requirements, you only need to meet one of these criteria, not all of them. If you served before 1955, you need 90 plus consecutive days of active duty. If you served after 1955, you need 178 plus consecutive days of active duty. Any service length if you were discharged specifically for a service-connected disability. Any service length if you currently have a VA disability rating, regardless of percentage. At least 1 day served in the combat zone, which includes most deployments to Iraq, Afghanistan, Vietnam, Korea, and many other locations. If you received any combat or campaign medal during your service. If you're receiving a non-service connected VA pension. It's worth noting that these eligibility criteria are sometimes more inclusive than federal VA loan requirements. Look, I've worked with veterans who didn't qualify for federal VA loans, but did qualify for ODVA loans purely due to their combat medals. Documentation is straightforward. Typically, your DD-214 is sufficient, though The ODVA can also access your service records directly with your permission if needed. And like most things in the military, you won't need to provide it in triplicate. As for property requirements, your new home must be located within Oregon's borders, though you don't need to be an Oregon resident when applying. A single-family home, condo, townhouse, or manufactured home that meets standard safety criteria. Intended to be owner-occupied within 60 days of closing. Financed up to 95% loan to value, meaning a 5% down payment is required. Now let's talk about that 5% down payment requirement, as it is one of the key differences from federal VA loans. Unlike the federal VA program that offers true zero down financing, ODVA loans always require at least 5% down. This is an important consideration if you're tight on cash for your down payment. Additionally, ODVA loans do require mortgage insurance similar to conventional loans with less than 20% down. This is another important difference from federal VA loans, which don't have traditional mortgage insurance, but instead have the funding fee. It's like choosing between field day every week or one massive working party at the end of the year. Different forms of pain, same end result. Credit requirements are relatively similar to federal VA loans. While there's no official minimum score, I typically recommend having at least a 620 FICO score to qualify. That said, I've helped veterans with scores as low as 600 secure ODVA financing by demonstrating compensating factors like stable employment and reasonable debt-to-income ratios. Let's explore the major differences between ODVA loans and federal VA loans, looking at both advantages and potential drawbacks of each program. Down payment requirements. As I mentioned earlier, federal VA loans offer true zero down financing for eligible veterans, while ODVA loans require a minimum 5% down payment. This 5% requirement can be a significant hurdle if you're working with limited savings, but it also means you get to start with more equity in your home. Funding fee versus mortgage insurance. Federal VA loans charge a funding fee that varies based on your down payment and whether it's your first time using it. For most first-time users making no down payment, this fee is 2.3% of the loan amount and gets added to your loan balance. With ODVA loans, you don't have this upfront funding fee, but they do require mortgage insurance if your down payment is less than 20%. This could result in a slightly higher monthly payment compared to a VA loan, but without a large upfront fee being added to your loan balance, it's the difference between getting hit with one big bill versus spreading the pain out over time. For veterans with VA disability ratings who qualify for the funding fee waiver, the federal VA loan may have an edge here since both the funding fee is waived and there's no monthly mortgage insurance. That's a big win. Interest rates. Interest rates between the two programs fluctuate over time. Historically, ODVA loans have sometimes offered lower rates than federal VA loans, but this advantage varies with market conditions. As of March 2025, the difference is minimal. ODVA loans are currently offered around 6%, while VA loans average around 6.375%, both at no points. It's important to check current rates whether you're making your decision, as this comparison can change from month to month or even week to week or even day to day. Owner occupancy and rental property restrictions. Here's a crucial difference you need to understand. While both loan types require you to initially occupy the home as your primary residence, they differ significantly if you later want to turn that property into a rental. With a federal VA loan, if you've satisfied the initial occupancy requirements and decide to move, you can generally keep your VA loan in place while renting out the property. It's one of the hidden benefits of VA loans that many veterans use to start building a real estate portfolio. With an ODVA loan, however, you cannot convert the property to a rental and keep the loan. If you decide to move and want to keep the property as an investment, you'll need to either sell it or refinance it into a conventional Fannie Mae or Freddie Mac loan. It's like those restrictive orders that tell you exactly where you can go and can't go. The ODVA program wants that property to remain owner occupied, or it wants its money back. This is a major consideration if you're thinking about your long-term investment strategy. If your 5-year plan includes turning your first home into a rental property while you move to a bigger place, the federal VA loan gives you more flexibility than the ODVA loan. Preserving VA entitlement. One significant advantage of using an ODVA loan is that it preserves your federal VA loan entitlement for future use. This can be incredibly valuable if you think you might move to another state later. If you use your federal VA loan to buy in Oregon and then need to relocate to another state, a portion of your entitlement remains tied up in the Oregon property until you sell it and pay off the loan. But if you use an ODVA loan for your Oregon purchase, your entire federal VA entitlement remains untouched and available for use elsewhere. Local servicing. ODVA loans are serviced locally in Salem, Oregon, and your loan will never be sold to another servicer. With federal VA loans, the servicing is typically handled by larger national institutions and may be transferred multiple times over the life of your loan. It's like the difference between working with your direct chain of command versus trying to get something done through HQ. Local servicing means when you have questions or concerns, you're speaking with Oregonians who understand the local housing market and veteran needs. Many veterans appreciate this more personalized approach to loan servicing. It's refreshing to talk to someone who actually understands your situation. Now let's talk about situations where one program might make sense than the other for your specific circumstances. Think of this as your tactical guide to choosing the right equipment for the mission. Federal VA loans might be the better choice when you have limited funds for a down payment and need a true zero down option. Because sometimes your saving account looks like the day before payday. You have a VA disability rating that qualifies you for the funding fee waiver. You're looking at properties above the ODVA loan limit of $806,250. You want the lowest possible monthly payment without mortgage insurance. You're uncertain about how long you'll stay in the home and want maximum flexibility. Because if military life taught us anything, it's that nothing is permanent. You might want to convert the property to a rental in the future rather than selling it. Now, ODVA loans might be the better choice when you have at least 5% to put down and want to avoid the funding fee. You want to preserve your federal VA entitlement for potential future use in another state. You prefer having your loan serviced locally than by a national servicer. You value knowing your loan won't be sold or transferred to different companies, unlike your service record, which somehow got lost 3 times. You've already used your VA entitlement elsewhere and have partial entitlement. You plan to sell the home when you move rather than keeping it as a rental property. But the best approach is often to have an independent mortgage broker run the numbers for both options side by side, taking into account your specific financial situation, how long you plan to stay in the home, and your future housing plans. Think of it as having a good battle plan before moving out. The 5-paragraph order of home financing, if you will. Now let's walk through exactly how to apply for an ODVA loan step by step. Step 1, pre-qualification. This works similarly to other mortgage programs. You'll provide basic information about your income, assets, credit, and service history to determine your eligibility and how much you can borrow. This can typically be done in a single phone call, Zoom, or an in-person meeting. Step 2, certificate of eligibility. The ODVA can often verify your eligibility within 24 to 48 hours using your DD-214 or through direct access to service records. Step 3, property selection. Work with your real estate agent to find an eligible property in Oregon. Once you have a property under contract, your ODVA loan application moves to formal processing. Step 4, underwriting. This typically takes 21 to 30 days and includes a property appraisal, verification of your employment and income, a review of your credit history. It's kind of like a background check for a security clearance, but they care more about your payment history than that one time in Thailand. Step 5, closing. Once we receive your final approval, you'll sign the final paperwork and receive your keys. This part involves signing your name about 500 times, oddly similar to checking out of your last duty station. The ODVA loan process is generally comparable in time frame to federal VA loans, though some veterans report slightly faster processing times due to the local nature of the program. Before we wrap up, let me address some questions I frequently receive about ODVA loans. Consider this the FAQ portion. Can I use my ODVA loan for a second home or investment property, or convert my primary residence into a rental property later. No, on all counts. This property must be your primary residence when you purchase it and must remain owner occupied throughout the life of the loan. If you decide you want to move and convert the property to a rental, you'll need to either sell the home or refinance into a conventional loan. This is the major difference from VA loans, which generally allow you to keep the loan in place when you convert to a rental. It's one of those read the fine print situations that could impact your long-term real estate plans. Is ODVA mortgage insurance permanent like FHA loans? Unlike FHA loans, where mortgage insurance typically remains for the life of the loan, ODVA mortgage insurance can be removed once you reach 20% equity in your home, similar to conventional loans. Are there income limits for the ODVA program? No, there are no income restrictions. Higher income veterans receive the same eligibility as those with more modest incomes. Do ODVA loans have the same property condition requirements as federal VA loans? Generally, yes. The home must meet basic safety, security, and soundness requirements. The standards are comparable to federal VA appraisal requirements. They won't let you buy a place that resembles the barracks after a 3-day weekend. Can I use the ODVA loan for home improvements or construction? The ODVA loan program is generally designed for purchasing existing homes and newly completed construction. However, it's not used for major renovation projects like VA renovation loans can be. What if interest rates drop significantly in the future? You can always refinance your ODVA loan in the future. While you can't use the ODVA program itself for refinancing, you could refinance into a conventional loan or a federal VA loan if the terms make sense at the time. If you're a veteran planning to buy a home in Oregon, I encourage you to explore both the ODVA loan program and federal VA loans before making your decision. Each has distinct advantages, and the right choice depends on your specific financial situation and long-term plans. As they say in the military, proper planning prevents poor performance, especially when it comes to possibly the biggest purchase of your life. Click the link in my bio to schedule a free consultation with myself. I can check your eligibility for both programs and run a personalized comparison showing how each option would work for your specific situation. And I promise, my appointment scheduling system is more reliable than those wait-and-see formation lines. If you found this information helpful, please give this video a thumbs up so more veterans can discover all of their options. Drop any questions you have in the comments below. I read and respond to every comment. Thanks for watching, and I look forward to helping you navigate your mortgage options for your Oregon home purchase. Until next time, this is Matt Jolivet, helping veterans make informed home buying decisions. Because you've already served your country, you shouldn't have to fight with your mortgage.